On Business Incorporated today, we take a look at sustainability in African trade. Egypt receives wheat from Russia. And the International Monetary Fund gives condition for Ghana to receive economic aid. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. Let's begin as usual with market numbers starting in Africa. Not a good one for Nigeria as we see the NGX as intraday deeply in the red. There you go, 2.55%. That's really deep, and we do not know how it will end at the close of trade today. But we see the offshore index is also at 46,355.35. We see Africa, South Africa is in the red, in the green, I beg your pardon, 1.44%. And then other parts of the continent, Egypt is also in the red. Every other person is in the red except the NGX of Nigeria. Egypt is up 0.78%, and Kenya closed Friday's trade more than 1.5% up. That's a good one for Kenya. They're seeing that it is recovering. We move over to the Middle East now to see what's going on there, and it's also positive there except for Abu Dhabi in the Middle East. Abu Dhabi is down 0.35% at 9,742.31. Dubai marginally up, very slight, almost at the edge there. We see that's what happened at intraday. If we look at other parts in that area, we'll see that Saudi Arabia is positive 1.61%. Qatar is also marginally up 0.04%. Well, let's go over to Europe and see what's going on in Germany. Declining consumer sentiments and rising energy costs could prove a toxic mix for many small businesses, well, not just in Europe, also in other parts of the world at this time. The Retail Association in Germany is predicting a potential disaster for inner cities. Well, let's get the details of what this is about and the implication of this with Chris Kober joining us now from Berlin. Hi, Chris. Good afternoon. So what exactly does this lobby group mean with this warning?
Well, this warning is based on the fact that German inner cities to this day feature a lot of small shops and businesses. Of course, big brands and retail chains are present as well, but many say it's these small shops in the historic center of a town that make up its individual character. And these businesses have been facing numerous challenges in the past. The growth of online retail, which has eaten into profits, big chain brands trying to get into the market of artisanal goods, and of course the pandemic when health regulations proved to be a strain on revenue. Now, these problems have been reasons behind the decline of inner city businesses and skyrocketing energy prices and people's growing reluctance to spend money on anything besides essential daily products could be accelerating this sad trend. It's mainly garment and fashion shops that have been having tough times as it is, and which are now even more fearing for their business.
Yeah, so what are the indicators that, I mean, this warning really could have potential big trouble?
Well, consumer sentiment has hit record lows according to Germany's leading economic research institutions, and the Retail Federation itself has commissioned a study which showed that 60% of those polled are already cutting back on what they're spending. Around 3/4 of those asked said that they are planning to rein in spending in the coming months. Recent figures of Germany's statistics office showed that retail revenue in August sank by more than 4% compared to a year ago. And for the whole retail sector, the lobby group expects revenue to decline by 5% within the second half of the year. That's 5%, a 5% loss compared to the already dismal second half of 2021 when the pandemic had fully hit. In some areas, revenue levels are still up to 20% lower compared to pre-crisis times. Now, there are calls that public financial support needs to be extended to these small businesses, but there's also the acknowledgement that in times of growing demand for financial aid, funds aren't likely to increase. Now, there are ideas out there that have proven to work. In some places, the city gets the right of first refusal on inner city properties in an attempt to influence what the heart of the city looks like. There have been programs to upgrade the facades of buildings. There are initiatives to support pop-up stores. There have been direct cash injections for some small shops, and city officials are increasingly talking about mixing retail, residential living, art, and culture. These are some of the ideas of how to support shops in the hearts of German cities and how to keep these very hearts attractive, even if businesses cannot be saved.
Yeah, well, a lot of conversations going on there and a lot of indicators. But how's the market taking this?
On a positive note, Germany's blue chips index DAX advancing around 0.5% this morning. That after a turbulent week during which at times the DAX struggled to stay above 12,000 points, and on Friday afternoon reaching its highest level since the end of September. Today, investors are awaiting clarity on the UK's fiscal plan amid jitters about the growing likelihood of a recession sparked by central banks' fight against soaring prices. On Friday, the University of Michigan in the U.S. published its inflation projection, which fueled concerns that the Fed is likely to continue its hawkish approach to inflation that's proved unexpectedly stubborn.
Yeah, stubborn indeed, Chris. Thank you so much, and we'll talk to you tomorrow. Let's head to London now, where Juliana is standing by in our studios there. Juliana, good afternoon. It seems we're doing away with the mini budget after so much minds and hearts put into it and emotions. It looks like the mini budget is going after all.
Good afternoon, Innie. You're absolutely right. Jeremy Hunt, the new Chancellor, who's been dubbed the most powerful man in British politics, has literally put an axe through the mini budget, also known as the Maxi Shambles, which was only announced on the 23rd of September, saw the demise of Kwasi Kwarteng, the first black Chancellor who was sacked unceremoniously on Friday afternoon. Jeremy Hunt, former Foreign Secretary, former Health Secretary, former Culture Secretary. Now the Chancellor has done lots of media rounds on the weekend trying to shore up that market support. And then we got an announcement at 11 a.m. basically ripping up Liz Truss's economic policy, the policy that actually got her into number 10 Downing Street in the first place. There are two main sticking points from his announcement. The first one is the fact that that basic cut of income tax from a penny, so from 20 pence to 19 pence, that has been scrapped, which is pretty controversial because it wasn't just Kwasi Kwarteng who said that he was going to bring it into fruition next year, April. It was also announced by the former Chancellor, Rishi Sunak. He said that he was going to bring it into Parliament before Parliament was dissolved in 2024. He said that is not going to happen. I believe there are estimates that that is going to bring about £23 billion into the government coffers. They need that because there is such a big black hole. But then also, quite surprisingly, is the energy price cap guarantee. Now, you'll remember, Innie, this was brought in the morning of the announcement that the Queen had died. This was Liz Truss's first big fiscal policy announcement. It was first trumpeted by the Labour government because, of course, energy bills are just skyrocketing in this country. She said for 2 years, from the 1st of October until the end of April 2024, that we would not be paying more than £2,500 on our bills per year. Now, Jeremy Hunt, the Chancellor, has now said that we are not going to do that beyond the end of April. And this is a big fiscal policy statement by the Conservative government, because whilst there is so much political turmoil on this country, people are still struggling to pay their bills. And we know that it's not just hitting households, it's also hitting businesses. They said they can only do it to the end of April, which is a big shock for some, but great for the markets. The markets seem to have reacted really positively to Jeremy Hunt's statement. In fact, the pound rose the highest it's risen in about 2 years by more than 2.5%. Government bond yields also declined for the first time since the 28th of September statement. So there's a lot going on. We've got the economic statement, but then, of course, you've got the political upheaval. All bookies in the UK are taking bets on who is going to replace Liz Truss as Prime Minister. She is certainly very much wounded at the moment. The fact that Jeremy Hunt has had to come in basically saying everything this lady said is false and we're going to be reversing it is just not a good look. And even though we have had some positive reactions from the market, one statement is clearly not going to be enough. There's certainly going to be more chess playing over the next couple of days to try and see if that we can stabilise markets more permanently. But yes, it's another start of a very busy week in Downing Street, I've got to say, and we're just going to wait and see if the Prime Minister can last that long. I'm not sure she can, Innie.
Yeah, well, I guess you guys are not like us in Nigeria. We like to be patient and give a second and a third and a fourth chance and all of that. But, I mean, you mentioned the pound. I saw that it's bounced in the morning. How is it now and other indices in the market?
Yes, I don't have the live market data, I'm afraid, Innie. But as I said, the pound did rally 2.5% after we did hear from Jeremy Hunt. And I know that the FTSE 100 is up by 57 points. So there is some sort of market sighing of relief at the moment, depending on how further, the policy statements will go. We've got Prime Minister's questions on Wednesday, and we're also expecting more forensic market data. We'll be having a look at the PMI, but so far it's positive, but there is still so much political, ramblings to go on, so we'll just have to keep a close eye and wait and see what happens later in the week.
Yeah, thank you, Juliana. We'll certainly watch that space and see what happens. Thank you so much.
Thank you. Thanks, Lily.
So let's go to Asia now, where the market was mixed as recession fears weighed in over expectations of continued tightened monetary policies around the world. The Nikkei 225 fell by 1.16% to 26,775.79, while the topics lost 0.98% to 1,879.56. The US dollar continued to hover at 32-year highs against Japan's yen. And then in Australia, the S&P AX 200 was 1.4% lower at 6,604.40. Hong Kong's Hang Seng Index was marginally higher in the final hour of trade after reversing losses, while the Hang Seng Tech Index was 0.67% lower. The Shanghai Composite in mainland China paired earlier losses and gained 0.42% to 3,084.94, while the Shenzhen Component was up 0.36% to 11,000. Also, the South Korea's Kospi recovered earlier losses and gained 0.32%. Those are the numbers there. Well, let's see what's happening in the United States. Stock futures rose as investors weighed key earnings report after a wild week of trading. Futures on the Dow Jones Industrial Average gained 290 points. S&P 500 futures, let's look at the numbers there. In the positive, also more than 1%. That's the Dow Jones at 30,029. S&P futures 1.26%. In the green, 3,644.75. That's the meaning of that. And Nasdaq futures also in the green. A green market, green futures for the United States expected today at 10,902.75. That's the Nasdaq, almost 1.5% in the green. Now let's go over to the global oil space. Prices were steady as China's continuation of loose monetary policy will offset by fears that high inflation and energy costs could drag the global economy into recession. Brent crude futures rose 50 cents to $92.13 a barrel, recovering from a 6.4% fall last week. U.S. West Texas Intermediate crude futures was up $86.06 a barrel, up 43 cents after a 7.6% decline last week. China's central bank rolled over maturing medium-term policy loans while keeping the interest rates unchanged for a second month, in a signal that the central bank would continue to maintain loose monetary policy, unlike what's happening in a lot of other countries in the world. Let's take a break now. After the break, we do have stories for you settling on the African continent. So stay with us. This is Business Incorporated on Channels Television. Welcome back to watching Business Incorporated here on Channels Television. We'll start off the second segment with news from Nigeria. Not very good news. Nigeria's inflation rate surged again to 20.77%. That's for September, and that's up from 20.52%, which was the record in August. The new Consumer Price Index report by the National Bureau of Statistics shows that Nigeria's CPI rose year on year, that's a 20.77%. And on a month-on-month basis, the index rose by 1.36% compared to 1.77% increase recorded in the previous month. Of course, the implication of this, you may already have been feeling it if you live in Nigeria. It means that you're paying more for your goods and services than you paid in August. So because August, it was 20.52, now it's 20.77. And I wonder if there are factors that could bring it down for the month of October. We're already halfway into the month, and I've not felt any reduction in prices. I don't know about you. That's inflation. We'll cover that and see more conversations around that from tomorrow on Business Morning and, of course, on Business Incorporated. All you have to do is stick with Channels Television. We'll bring you all the relevant information as it affects you. So now let's go to some other ones. Now, Africa's trade finance gap, estimated to be between $80 billion and $120 billion, has widened even further over the past decade, exacerbated by the disruption to global supply chains caused by the COVID-19 pandemic. And of course, we also have the war going on in Ukraine. The lack of access to trade finance especially impacts Africa's SMEs, which make up around 80% of African traders and whose banks struggle with regulatory costs to profitably finance their merchant activities. Against this background, we discuss sustainability in African trade. And we do that with Ted George. He's the founder, Chief Narrative Officer of Kleos Advisory. Hi, Ted. Good afternoon. Been a while. Good to have you back on the show. Hello, Ted. Can you hear me, Ted?
Nice to be back.
Wow, unfortunately, seems like we'll have to just move on now and see if we can get back to Ted in a couple of minutes. Hopefully, his network will be stronger than it is at this time. Well, let's move to Egypt. Cargo ship Oksana 5, flying the flag of Panama and coming from Russia, delivered 38,850 tons of wheat imported by Egypt through Damietta port. The Damietta seaport received 12 ships during the past 24 hours, while 10 ships left the port, bringing the total number of ships in the port to 19, including the liquefied gas tanker LNG Endeavour, which carries the French flag. And LNG Endeavour is scheduled to carry a shipment of about 60,000 tons of liquefied gas. The general export cargo flow recorded reached 6,498 tons, including 1,843 tons of cement, 65 tons of marble, 85 tons of glass sand, 260 tons of beets fodder, and 4,245 tons of miscellaneous merchandise. And then we move to Ghana. We do know that Ghana has been trying to access aid from some international finance institution. Now, the International Monetary Fund has stated that an economic program for Ghana hinges on a reform plan which the government has just shared with the Bretton Woods institution. The fund is now assessing the reform and having further discussion on the plan, but hopes to fast-track it. Officials say discussions are proceeding well, but that will depend on how quickly the reform plan can be fleshed out. IMF is set to assess exactly the debt sustainability situation of the country is and how the government would like to address that once the work has been completed. I wonder if Ted can hear me now. Hi, Ted. Good afternoon. Can you hear me?
Yes, I can. Can you hear me now?
Great. I can hear you, Ted. I was saying it's been a while. Good to have you back on the show.
Yeah, no, it's really nice to be back. Please go ahead.
Great. So tell us about the sustainability in African trade. What's that about? Why should it concern me? What does it hold for me?
Well, the big concern, look, there's a big opportunity with sustainability in African trade, but the big concern is, as I'm sure a lot of you are aware, there are lots of regulations and standards being developed internationally which are going to impact Africa. And I've been working on a paper with the International Trade and Forfeiting Association because we're concerned that a lot of these regulations that are going to come out will make the trade finance gap even worse in Africa. It's already difficult for the SMEs. They're the ones who really struggle to get the finance because there's a lot of KYC, all of the, you've got to get all the right kind of documentation about yourself, collateral. But now, if you add on top of that a whole load of requirements in the ESG space, it could make it nearly impossible. So there really needs to be an African voice in this debate so that emerging markets don't get punished by an attempt to make everything much more sustainable.
Is there anything, I mean, you mentioned the SMEs, and quite frankly, they do occupy a very important place on the continent's economy. I mean, 80% of them, when you talk about trade, is there any way, they have quite not so loud voices, is there anything they can be doing now to be part of it, to be heard and be represented in this conversation?
Well, absolutely. And what they can do that is by, all of the connections that they have with the different banks and the financiers, the different regulators as well, the institutions that they know. Because, as you said, trade, SMEs make up most of the businesses in Africa. And also most SMEs are actually owned and run by women as well. So an opportunity to get finance to the SMEs is also female empowerment as well. It's also economic diversification. And of course, everyone has a business in Africa. I literally don't know a Nigerian who doesn't always have something on the side, whatever it might be, import, export, real estate, some other kind of investment. And so this is really about genuinely reaching out to all of the real businesses in Africa, not just the big multinationals who frankly have enough access to finance.
Ted, I think you caught me there when you said you don't know a Nigerian who doesn't have a side, activity going on. But should this be driven by the private sector or should it be by the public sector?
Well, what we're talking here is about standards and regulation. And so we do want international or pan-national bodies, so pan-African bodies, for example, to come up with proper standards and regulations because it's environment. I mean, one thing is not reducing emissions, but we're also talking here about stopping deforestation, protecting biodiversity and natural ecosystems. But we're talking about the S in ESG as well, the social impacts, stamping out things like child labor, abusive working practices, or having people's livelihoods destroyed by pollution, for example. So all of those issues need to be captured, but it needs to be understood in an African context. And so the concern that we have here is that there are standards which are being developed internationally for multinational corporations, which don't understand the realities of what it's like for SMEs. And this isn't just Africa, this is all emerging markets in the world. So I think the important thing here is that there needs to be definitely standards that evolve, designed by Africans and with the agreement of Africans, and then approved at a regional level so everyone can get behind it.
Yeah, Ted, I hear you there. To be understood in an African context, I think that's really important because that's how to get the buy-in of a majority of Africans. Thank you so much, Ted George, founder with Close Advisory. Thanks a lot for your time.
My pleasure.
All right, just before we go, South Africa's mid-month data from the Central Energy Fund shows that petrol and diesel prices could be going up in the next month, that's November, following an early month shock for oil and continued pressure on the rand. The price of petrol could increase by 48 cents after price decreases in the last couple of months, while the price of diesel could go up by as much as R1.57. Local fuel price fluctuations are impacted by two main factors: the international price of petroleum products, driven mainly by oil prices, and the rand to dollar exchange rate used in the purchase of those products. Finally, still in South Africa, the country has missed the train of the commodity cycle as the export commodity price basket has come down from earlier peaks and is now forecast to rise by 2.3%. That's down from 3.2%. It was earlier forecast at that rate. The International Monetary Fund has lamented the impacts of the ongoing electricity crisis on the South African country as the mining industry misses out on the windfall of global commodity boom. In its latest assessment, the IMF says that they view South Africa as a country that has been impacted quite a bit by global economic conditions and pressures on financial markets, but more by internal challenges which the country is facing. That's it on the program today. It's just the first one for the week. We do have 4 more rounds to go. So tomorrow, 1:30, I'll be back with Business Incorporated. But 10 a.m., Business Morning will be here to give you conversations that are relevant and current from the world of business. I'm Minnie John Mekwa. Enjoy the rest of your day.